Hey everyone, Ian King here, back with your weekly Winning Investor Daily webinar. Joining me this week, again, my friend and colleague, Steve Fernandez. Steve, what's happening out there?
It's getting chilly.
Oh yeah, look, you got your pullover on. Your beard's growing back though, it's looking good. And before we start today's webinar, I just want to remind you, if you like what we have to say in the webinar, go ahead and smash that like button. Tell your friends to subscribe to us. Because this week we're going to talk about something that might be a little controversial for many of you. And Steve and I discussed this before we went on air. And that is the fact that Bitcoin in the next, who knows, 5 years, 10 years or so, could replace gold as the world's store of value. Now, I want to start this out by asking Steve this question because he represents our younger generation. Steve is basically almost a millennial, is what he said. He's basically on the cusp of millennial and Gen Z. Steve, are you buying Bitcoin or gold as a store of value?
Just have to correct you there. I'm technically a millennial. I'm on the cusp of being a Gen Z.
Oh, okay. So you're not that young.
Yeah, exactly.
Okay.
So I know that the younger generations definitely are leaning towards Bitcoin. I mean, it's a lot more accessible. Obviously, you can own gold, indirectly through an ETF, but not many people are, buying gold futures and taking delivery of gold bars or going to gold stores. So, just from the convenience aspect, there's definitely a push towards Bitcoin. And also, we've all seen what the price of Bitcoin has done as well. So that's all obviously attractive.
I'm glad you mentioned that because I want to pull this chart up right now. So as we see, Bitcoin has broken above 50,000 in the last week. Market cap is also above $1 trillion. That's based on both a technical move and also some talk in Brazil that they're going to put it up for a vote to make Bitcoin legal tender. This will be the second country behind El Salvador to potentially make Bitcoin. Well, it is legal tender in El Salvador, but now you have Brazil, a much larger country. Steve, what do you think about that? I mean, could this really be legal tender in Brazil? Do you think this will pass?
I think so. There's been some general interest in the Latin America area. I mean, it's Cuba, obviously, or Cuba had already made commercial transactions legal for altcoins and Bitcoin. And I've even heard that Panama is in a similar boat with Brazil, where they proposed a bill for Bitcoin becoming a legal tender.
Mm-hmm. Let's go back to this idea, though, of Bitcoin surpassing gold in market cap. And I just want to pull this up. Gold market cap right now at about 11 trillion. Bitcoin, as I said, just crossed 1 trillion. People buy gold as a store of value, but from my experience, when you need gold the most to hedge your portfolio, it has not worked. And I remember just back during the financial crisis when people were, moving their assets into gold, thinking that would go up, and it sold off with other financial assets. Now, Bitcoin could still do the same thing. I think it probably sells off with the market and the stock market the next time we enter a bear market or a recession. But this idea that gold is always going to be a store of value, although, it's held up for 5,000 years and has worked really well since the 1970s when Nixon abrogated the gold standard. But, what happened last year during the pandemic to gold, Steve?
So I'm going to showcase my short-term bias here. But obviously, with the whole COVID pandemic, that traumatic, and the market was in a panic. So, gold, it dropped, like you said. Even uncorrelated assets show some correlation when.
Okay. Whoa. Uncorrelated assets, explain what that is.
Sure. So uncorrelated just means, let's say the market moves in one direction and gold doesn't move at all, right? So generally they're considered uncorrelated, but in times of stress, most assets are correlated in some degree.
Right.
So Bitcoin, gold, they both sold off, but when you look at just the first 6 months of 2020, we're, right around where the COVID pandemic was really heating up, Bitcoin had already surpassed gold in terms of its return. So not much of a hedge on the gold, the gold return there.
Interesting. And one other note that I want to bring up is that everyone says, well, gold has always been this store of value throughout history. And I just want to bring up an example of how things that we think have more value in the past don't now. I was at the Metropolitan Museum of Art in New York City. This is probably 8 years ago, and I was walking around and I was talking to one of the museum curators, and I was in the Greek antiquities section. I don't know if you're familiar with that, Steve, where they have all the statues and the sarcophagi.
Not too much.
And these are statues that are 2,000 years old. Okay. And I asked the art curator, how much would one of these statues go for at auction? And she said to me, probably around $1 million. And I was just like, that just seems so cheap for something that's 2,000 years old, that we hold, in high esteem as something as antiquities. So there's that issue. She was saying how, there's just not many buyers. There were buyers in the 80s for these antiquities, but now buyers are moving on to more modern forms of art, and NFTs in particular. And the other thing is the idea that gold is this technology that's a store of value, but we've seen throughout history, when a new technology arrives, people move from that old technology to the new one. So case in point is, we used to ride around on horses and we had horse and buggies. The automobile came by, and that was just a better way of getting from point A to point B. And in the same way, Bitcoin is a better way of storing value, because you can self-custody it, you can move it, it's fungible, you can send it anywhere around the world, and it has all the properties that gold doesn't have. But lastly, and I think this is why what you said about yourself and your peers thinking Bitcoin is going to be the future store of value, it's not really what you think, it's what the younger generation thinks, because they're the ones that are going to be where the demand is coming from, right? Anyone who is of working age right now and is allocating money to their investments from their paycheck, that's really moving the needle on these assets more than anything else. Not really what you think or what you had invested in the past. It's where is that future demand coming from? And so that's why I wanted to ask you that question, whether or not, you're investing in Bitcoin or gold as a store of value to hedge some non-correlated risks in your portfolio. So that's what I have to say about that.
Yeah, so I agree with that 100%. Obviously, the players in the economy, it's not just this time period. Obviously, as time goes on, we age, younger generations work, they have more income. Mm-hmm. The younger generation, they're dollar cost averaging in many cases into cryptos. Basically, what that means is, let's say they get their paycheck and they allocate 10% of their paycheck automatically to cryptos. They don't even touch it. I have not heard of one person doing that with gold. Not saying that it doesn't exist. I'm sure it does, but it's not even just like retail and the younger generations, even institutions. You don't really hear, unless there's really that stressful period like we saw last year, you don't really hear like the narrative of go out and buy gold, right? But we've heard the overwhelming narrative of go out and buy crypto. We're investing crypto. We're creating funds to buy crypto. So obviously Bitcoin is the king crypto per se in a market cap basis. So you have to think that value, should grow and hold value as well.
Right. It's really the perception that counts. And one other thing to your point about millennials and Gen Z investing the paychecks in crypto, the banks are also getting into this as well. Initially, they were hesitant and laughed at it. Jamie Dimon called Bitcoin a fraud and a scam. And now, just in the last week, Bank of America says that we're going to open up a crypto division because this sector is just too big to ignore. And obviously banks do this because they see profits in doing it. They're not doing it for altruistic reasons. And of course, crypto being insanely profitable in the last run for investors, it's exciting to see that banks are now going to facilitate their investors and help people do research and come up with new ideas in the future. So let's leave it there. Would love to hear from you in the comments this week. Any questions, let us know. Do you own gold, or you're moving some of your gold reserves over to Bitcoin? Like for myself and my colleague, Steve, have a great weekend, and we'll talk to you next week. Thank you.